Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Vinay Joseph. On Monday, we released a market watch titled, Are We There Yet? And today's podcast, we address the key question on investors' mind, whether we are approaching the bottom in risk assets. First, a quick performance summary. 2022 has been a challenging year so far for the two main asset classes, equities and bonds, as central banks continue to guide rate hike expectations higher in order to tackle record levels of inflation. The fall in equities in May has taken the peak to trough fall for the Nifty index to about 15%. Broader indices are in bear market territory, that is, a peak to trough fall of 20% or more, with the mid-cap index and the small-cap index peak to trough fall about 18% and 27% respectively. Bond yields have continued to surge, with the benchmark 10-year IGB bond yield up close to 100 bips, while short-term yields have surged between 150 to 200 bips since October 2021. During this period of volatility, the INR has depreciated to a new all-time low against the USD, while gold has risen by about 8%, demonstrating its safe haven attribute. In the short term, we think that market volatility is likely to stay elevated as equity markets adjust to a higher interest rate scenario and technicals remain weak, at least in the short term. However, as we highlighted in our latest Indian market outlook, we remain buyers rather than sellers given 5 factors. First, domestic macro fundamentals remain strong. Economic indicators, from PMI indices to GST collection to e-way bills and power demand, continue to signal above-trend economic growth, amid a still supportive policy environment where rates are not restrictive for equity markets yet. Second, and the most important factor, corporate earnings cycle remains resilient. Earnings is the main driver of equity returns in mid-cycle, and that remains robust, with consensus expecting Nifty index EPS to grow about 35% for the fiscal year ending 2022 and 20% for the fiscal year ending 2023. The current earnings delivery for the quarter has been better than expectations, with 75% of the reported earnings either meeting or beating expectations, and profit and revenue growth for these reporting companies growing 37 and 13% year-on-year, both ahead of market expectations. The third factor is that bond yields are already factoring a very aggressive rate hike trajectory. It is possible that we are approaching the point where markets now start to limit how much further it expects policy rates to rise. The one-year overnight index swap or OI spread suggests market participants expect the RBI to raise policy rates or the repo rate by at least 150 bips over the next 12 months, which we think is a tad too aggressive. The fourth point is that Nifty correction still remains within pullback territory. As highlighted earlier, the Nifty index is down around 15% from its October 2021 peak. On its own, this remains within the 10 to 16% pullbacks we see during bull markets, and we have witnessed over the last 6 times over the period 2005 to 2020. Though sentiment has felt a lot worse this time because of elevated volatility, and also that the current pullback has been longest in the terms of duration. Lastly, investors should not forget about COMO. Now, during volatile markets, investors face significant COMO, or the cost of missing out, by not being invested. This is disastrous, as the cost of missing even a few good days could lower one's return sharply. Further, the best trading days usually coincide or follow the worst trading days, as shown by last week's volatile movements, which makes it impossible to time the market. So if these 5 factors play out, we think that it would be good to add to equities given the market volatility within your risk profile. That's all for today. Please reach out to your relationship manager for a copy of our report And as always, if you find the podcast useful, please like and subscribe. Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.